The Fed and the ECB continue to live on Fantasy Island. Boss, the plane, the plane. What's up, everybody? Welcome aboard. It's Bubba's Bottom Line, and of course, this is our weekend edition where we get to go through all the things that I'm thinking about and kind of recap last week's market action. And of course, we did hear from the Fed, and of course, they did what was expected to raise and continue to rave on how good things are going in the economy, but yet they can't seem to raise rates. We'll cover that in our commentary at the end of the day. And of course, the ECB was on Thursday. And of course, they did nothing as well, which continues to keep them in their Fantasy Island world. But in the meantime, the markets continue to move themselves higher. And when you look at it, there is not an issue. The markets are telling you that there is not a lot of concern. The markets are telling you that they are happy with what the ECB and the Federal Reserve are doing. The markets are telling you that the trade wars and the tariffs are no big deal. And of course, from the trade war standpoint, I agree that it is no big deal, but we'll get into that in a little bit. But first, as we look at the markets last week, the S&P pretty much flat for the week, nothing too exciting. Dow a little bit lower, NASDAQ, Russell, new highs once again. So we're seeing a lot of strength in markets. We're seeing the general markets moving higher. We've seen the Dow be the weakest, which is consistent with more of a bullish market. So we can't face the fact, or we can't argue the facts that the markets right now still want to go higher. You saw for the second Friday in a row, you saw a market that took some news overnight, misinterpreted it once again. Markets were under heavy pressure, only to see the markets try to turn around. This week they didn't quite make it, but they did get back to near unchanged. But when you look at the overall picture, the markets certainly were not ugly on Friday. And in fact, if you look at the volatility index was lower once again, leading to the facts of overall complacency in the markets. Investors alike all believe that there's nothing ever going to happen bad here. Now, we know from experience that is a problem. All right, we know that overall complacency is eventually going to be the problem in the market. But again, we're not predicting anything crazy here, as we have said for about almost a month now, that we are neutral, observing, expecting the markets to potentially test the highs. You cannot be bearish in this particular setup the way the markets are acting right now. It does not mean we won't go down, but you really want to be a seller on the subsequent rally from a sell-off, because we're going to get a sell-off at some point, whether it be hard or not. Now, again, you've seen evidence that no sell-off has been that big. In fact, they've all seemed to come back and rally. We see a lack of overall volume, which is a sign to think about. We see a lot of issues to believe. Now, if we look at last Friday, again, back to the trade war tariffs, President Trump put, I think, $50 billion in tariffs. And of course, China immediately retaliated, sending the markets into a little bit of a tailspin. But it's not a tailspin. A 200-point move in the Dow is less than 1%. So we have to quit making a big deal about the number. Remember, the number is in relationship to the percentage of the move. In the meantime, the grains got murdered early, and the grains have been under a very rough period of time here. Now, part of the reason I would think is that they were very strong, and they went up a little bit too fast. I think you're seeing some panic from those who were involved, but I think that what you really would see is that this is really more of a buying opportunity when they come down to these levels, and you should see a much bigger bounce. That is where we are still extremely bullish, the grain markets. We are still extremely bullish the agricultural markets. Take a look at what happened. We've been talking about hogs for weeks, that we're going to get to 82 to 85. Well, we got to 83 last week, closed almost right around 82. Cattle had a dramatic bounce on Friday. The live cattle had almost a $5 bounce from the lows, closed up the limit. Feeders had almost a $7 bounce from the lows, closed up almost limit. So again, this is where you should take the opportunity when things don't make sense and they whack them for no reason. That's usually a buying opportunity. That's something we look at. We look at gold. Gold really caught me by surprise on Friday. I really thought that we were about ready to break out to the upside. And out of nowhere, gold got clobbered. Now again, I think what it looked like early was a wholesale sell everything, okay? Nothing is safe, dump it all right? And then of course, cooler has prevailed in a lot of the products, but not in gold. Gold is in trouble now. Again, if it breaks and closes below 1280, it's probably going to 1240. Now again, we were bullish and we're still looking to be buyers. We're not sellers of gold there, we're still looking to be buyers. But again, I obviously, as you can see, I wrote for Kitco, and I've been writing all along. I was fairly bullish. We were getting a great move. That's the way it is. Oil, as we have said for a while, and of course, when we reiterated when oil was in the 70s that it should be coming lower, and here we are. Now oil can't seem to get out of its own way. It's still in that backwardation period. We've got an OPEC meeting this week, which the crooks from OPEC are getting together again. How are they going to get to us? And I think this is the issue. OPEC should not have an overall effect on what is happening here. We are not dependent on Mideastern oil anymore. We have our own oil. So I think that that's one of the issues. But oil remains in what we call backwardation, which means that I think there's a lot more room to go on the downside. And I urge you to see where I'm getting my proof, not my proof because it's not been proved yet, but my evidence from and my reasons to sell. I urge you to look at July 2014. You will see the same pattern. I expect the same type of result because patterns do repeat themselves and so do markets. So I expect oil to go dramatically lower. I think our first support level will be 62, then 58, and then I think we're going down into the 40s. The dollar once again pushed up to the upside and tried to break that 95 level, and I believe that this week it probably will. I'm looking for 97 as our next target, and the euro currency got absolutely slammed. So as we see, all the information out there is indicating what the markets look like, which means that the markets still look like they want to go higher. The general equity markets, so who are we to say that they're not going to go higher? The 10-year sold off last week a little bit. Again, it can't seem to maintain that well over 3% rate, even with the Fed quarter-point hike. So that your triggers to watch in a market like this is the interest rate. Remember, our black swan is a very strong dollar, which we're getting there, and 10-year notes 3.5% or so. All right, so we haven't got there yet. But again, no, the markets do not announce themselves and tell you when they're going to have the black swan. The black swan just shows up. But I think these are the indications. But as long as volatility continues to go down, now we're going to get to a point where you're going to have to be a buyer of volatility, and that's the interesting thing that we need to look at. So that would be where you could start to signal. But again, trying to sell or short this market here is a fool's game. We know a hard rain is going to fall at some point. I mean, this is not a if, this is a when. And not because we're bearish, not because we don't like what's going on in the economy, because this is the way markets function. That is the way that markets work. Markets don't announce themselves, but they always do the same things over and over again. And this time will not be different, all right? There's gonna be a hard rain in this market. There's gonna be a beatdown, just like we saw in January. Now, for now, again, we said clearly, we're on the sidelines. We're observing and believing that it should probably go up and support levels should probably be bought. But at the end of the day, why get involved? Now, we've got the big trade war talk, and of course, China warns the U.S. corporation. Now, I think we're missing something here, and that is very simple. China can warn all they want. We are by far the biggest economy in the world. We hold, as they say, all the trump cards. We hold everything in our power here to do what we want to do. Now, again, I'm not saying that we should do a lot of nasty stuff, but I think that it's about time that our president said enough of the getting taken advantage of, enough of the giving away things, enough. And I think that's all that President Trump is doing, is saying that it's enough. And I think that he's right. You can listen to the spin from the media of what is right and what is wrong, and we talk about the surplus from Canada in our GDP and in trade. Mexico, again, but there's too many things going on which should, if we just went to straight out free trade, we would be better off. And I think it's about time, and I'm a big supporter of this, because I don't believe that this is the trade war that you heard, that you read about from Smoot-Hawley, that you saw with Bush. Okay, this is a president and a government now that is saying, this is where we want to be, and this is what we're going to do. And if you don't want to do it, then we will do without you. And I think that, where everybody's worried about the consumer paying more, this happening, it's amazing how we worry about the consumer paying more, but we don't worry about the consumer paying more for gasoline when the oil companies decide that all of a sudden, right before the biggest driving weekend of the year, that there's a shortage of oil. Now, you tell me how we got to $73 a barrel right before Memorial Day weekend, the biggest driving weekend of the year, and all of a sudden now we're at 64. Explain to me how come the prices have not come down anywhere near as fast. So we go back to the trade wars. We are going to be suppliers. And do you think, as we continue to hear the media pound on, well, it's going to kill the farmers, it's going to kill the farmers, are we going to stop eating all of a sudden? Is the food chain going to stop? Remember, food and grains are a soft commodity. They have to be created. They can't be manufactured. Do we think that with a growing population in the world and with more middle class being created, that they're not going to want to eat good food? We're going to be great here. This is going to work out better for the farmers and producers in the long run, that we do these trade wars now. It's going to create more opportunity, in my opinion. It's going to create more time that you can actually sell more, and it will create a much better opportunity, because we already know that China needs more than they can get, and Brazil and those cannot make enough to take care of all the needs. So whether we sell it direct or whether we sell it through somebody else, we're going to sell our products. And that's where I think we're all making the mistake, and this is where the huff is. But I don't think the real huff is directly from the farmers. I think the real huff is from the lobbyists, because when we look at the bigger picture here, the lobbyists and the politicians make a lot of money on these bad deals that were made. All of these bad deals, somebody had to be involved in it, and somebody's taken out a big payday, because at the end of the day, as we have talked about many times here before, the middle class is going to get screwed because of these big deals. Nothing has changed here. This is the same as the debt ceiling. This is the same as the fiscal cliff. Nothing changes. The middle class gets stuck, just like we got stuck for the bank bailout from 2008. So let's not kid ourselves that we're the ones. The ones that squawk the loudest, which are the lobbyists and the politicians, are the ones that are missing the benefit. And that's why they're concerned. They're not concerned about you and me. They're concerned about lining their own pockets. This goes to all of them. Okay, so keep that in mind as we look at these things. But in the meantime, as you're keeping that in mind, we're going to step out here for a break. This is Bubba's Bottom Line. I am Todd Bubba Horowitz, and of course, don't forget, if you'd like to help us out with our high school program as we get ready to start our 9th year, a program which I have financed myself into the last few months, where I did get some help through Patreon. If you'd like to help us out and help continue to educate our youth, go to Patreon, patreon.com/Bubba Trading, and you can help us continue this high school program. Otherwise, we're going to have to shut it down. In the meantime, don't forget to catch the Bubba Show every day from 4 to 5 Eastern at LibertyTalk.fm. And now let's get back to Bubba's Bottom Line. Welcome back to Bubba's Bottom Line. Todd Bubba Horowitz with you, and hope you're having a wonderful weekend. So as we said to think about it again. Just think about the things that go on. And, one of the big things that is interesting is, what goes on in the overall political system. Now, we've seen evidence that President Trump was not involved in any of this stuff in the investigation, and that it was led by Comey and those guys. Why is Comey not in jail? Just a question, okay? I mean, I don't really care one way or the other, but why is he not in jail? All right? Why do some people go to jail and some don't? I just find it that interesting. But, you know, as we look forward into the economy, okay, when will the next recession be coming? Now, you're starting to see the yield curve, which is bonds against notes, short-term bonds. As they go forward, they're supposed to be farther apart. It's kind of like that backwardation we talk about in crude. Yet the yield curve, so the 2-year bonds are actually flattening out with the 10-year, which is not the correct model. That is usually suggestive of not great economic times. Now, I continue to hear where we're going to have all this great growth, but I have not seen it. I don't see what's going on. I heard Chairman Powell talk about how great the economy is last week, but yet they are having trouble raising rates. Dudley, the Fed President Dudley, complains that unemployment is too low. Okay, you know, we're creating a lot of crappy jobs. All right, now again, I'm happy that we're creating jobs, and I'm happy that if people that want to go to work can go to work. But we are creating a lot of low-end jobs, and that is one of the big issues is we have a lot of jobs available, but unfortunately, the jobs are available. We don't have many people qualified for those jobs. And this was such an easy solution that could have been handled. But I tell you that I saw an article, okay, about industrial production declining. And what was the first thing? Well, the reason that it declined is there was a fire in some factory somewhere. Are you kidding me? Are you really do you really want to go into this? This is why I find it so irritating that we continue to make excuses when we don't make numbers. What is the problem with actually reporting the truth? It just isn't as good. Does it really matter what we're doing? And I find this to be always extremely frustrating from a citizen, from an American, that why can't we just say it like it is? Things suck, things are great. But yet we need to always have, this is happening, but, and I find that to be troubling. But, you know, one of the big signs to look at is the peer-to-peer lenders. Now, you know, many ask, should peer-to-peer lenders exist? Well, of course they should exist because they are creating liquidity. They're creating funding for people that can't get money from the banks. The banks are still not overly aggressively wanting to lend to new businesses. They're certainly creating another bubble in the housing markets because they feel that they have collateral, but they're certainly not interested in lending to businesses. And that I find is troubling. So that creates the model for peer-to-peer. You know, peer-to-peer lending is people that, you know, a guy like me would fund a company that would lend others money. There's a middle guy in the between, and obviously they take their fee for running it. I get a perk on my money. In the meantime, the reason that they exist is very simple, because there's a demand for money. You know, it's the same as when you look at some of the stocks like AG&C and Annaly Capital and some of those. They exist because people need a third-party lender that's actually willing to lend money at higher rates. I mean, you're not getting great rates when you go to these peer-to-peers, but they do create liquidity, they do create money, all right? So, but I think as we take a look and see, you know, if we go back and remember how all of these big banks and all of the governments, everybody's talked about the bubble and how phony and the crookedness of the cryptocurrency world. And all of a sudden, what do we have? The SEC paves the way for an Ethereum future now. So all of a sudden, you've got Jamie Dimon from JP Morgan, a believer. They have a department. Fidelity opened up a department. Goldman Sachs, although they bashed it before, has always been involved, which they're always ahead of everybody else. You're going to have a new Ethereum product, okay, another future coming up. You're getting more potential ETFs. So all of a sudden, it's becoming real. As we said here, this is part of the financial revolution, which will be more including to the Fed, which we'll talk about in our commentary. But the cryptocurrencies are real. Okay, they are real. They are going to be here, and they're probably a pretty good buy down at these levels here. Again, this is something that is getting lent more credibility as we go day by day. They are becoming more credible. Now, again, is everyone credible? Absolutely not. There is a lot of phony products out there. There's a lot of bad products. But this is no different than the internet era of the 90s, okay? Getting the right one. Now, I would have to say that as it looks now, Bitcoin is one of the right ones. That is a mainstay, a staple. Ethereum, a new one, EOS, and there's others. But again, you as an investor have to do your due diligence as to which one is the right one. Are you going to always make the right decision? Absolutely not. But by just jumping in blindly, that's the mistake that many investors make. That is the mistake that we see of things happening, okay? But I think one of the bigger things and one of the bigger problems that I see in general is that you have a lot of non-believers in the crypto space, and I think that'll actually will create the bigger boom to it when it comes. And again, just quick note on the last note on this is, do not put all of your money into it. Do not put a lot in, but a small percentage is always wise. Again, something that you can afford to lose if you're wrong is always the right way to trade anything as you go forward. Now, I think one of the things that we're seeing here, and I think this is a little bit concerning, is so much artificial intelligence, so many robots that are now taking over so many of these jobs. You know, it won't be long before you'll go to any place. I mean, Domino's Pizza and Little Caesars Pizza have already done a lot of this, okay? And they have machinery that they only need 1 to 2 people to run the entire operation versus 3 to 4 or 5 what they used to need. So think about how the jobs are going to cut. And it's not going to be long before, you know, we've already moved away from the banking system, you know, the tellers and things like that, and gone into machines. So you're going to start to see, and this looks like it's going to start to accelerate. And I think that, you know, to me, obviously it's progress. Not that I'm so thrilled with the progress, but I guess it's progress. But I want to know what's going to happen to those people that are going to lose those jobs. Okay, I think that's something that does create a little bit of a problem as well. I think that that not only do we have that, but we now have this pension train wreck coming up. We've talked about it before, and you know what? It's only getting worse, and it's only going to get bigger. And you know what? The other bigger problem is if the markets do fail, it's going to be even a bigger train wreck. And I think this is where we've lost the true due diligence of running this, and this is why so many adjustments need to be made going forward into these pension systems, because what we've seen here is a total disaster that is going to be a train wreck, and a lot of people are going to get hurt here, and it's a tragedy because if the pensioners would have done what they were supposed to do and continue to adjust age and things based on statistics. Again, we're not telling you that you should change in the middle, but based on a actuarial model, it's very simple to know when it's time to adjust. And again, there's more to this, but of course, I happen to know, for example, in the state of Illinois, the teacher's pension, the state itself has not funded it since I think 1999, because they don't have to as long as there's X amount of balance. Well, of course, a lot of these teachers are coming to retirement, and of course, it's going to be ugly. And that's another issue that has been created, and this is something that has been created, you know, by the Federal Reserve, which we'll get to in our commentary, and created by a lot of this, the way that we do things, and the inability and unwillingness to switch forward. But I do want to share one funny story, and by way of sneaking in a bitch here. I went to dinner last night to a very famous rib joint in Chicago, Carson's Ribs. And I sat down at the bar with my wife and my son and ordered dinner, had a cocktail, and I said to the waiter, I said, hey, can we get a basket of bread? And he goes, bread is $5 for a basket of bread now. Now, I've never heard of that. And of course, those of you who've watched me or have known me longer know that I went totally ballistic, walked out of the restaurant and said very many choice words as I was on my way out, and to management. And I cannot believe that this is what we've become down to, is that somebody they want you to spend $120 for dinner, and they want to charge you for $5 for a basket of bread. Makes absolutely no sense to me. But with that note, we're going to step out here for a break. This is Bubba's Bottom Line. Todd Bubba Horowitz will be right back with my commentary after the break. Bubba's Bottom Line. Remember, everybody, don't forget about our highschoolinvesting.com. Of course, we're trying to help educate the youth of America and trying to build. I keep hearing everybody talk about education. Well, we're doing the education. If you want to help us out, go to Patreon, patreon.com/Bubba Trading. And don't forget to catch the Bubba Show every day at libertytalk.fm, 4 to 5 Eastern Time. Let's get back to Bubba's Bottom Line. Welcome back to Bubba's Bottom Line. Todd Bubba Horowitz with you. And of course, the Federal Reserve, the ECB, the blind leading the blind, leading the blind. And I find it tragic that the Fed looks to be creating 1936 and 1937 all over again. It seems to me that the ECB is about as dumb as can be as well, that we continue with total negative rates. You know, I know one thing, when you try to hide the truth, when you try to hide the problem, when you try to borrow your way out of debt, when you try to do things that are unnatural to a free market, eventually it blows up in your face. Witness 2008, witness any period in history, witness 1936 and 1937. The Fed and the ECB have totally created a monster mess, which eventually will create a disaster for the average investor, for the average person, and of course, the wealthy will be thrilled with it because it'll give them a chance, again, to create and build more assets as they swoop in and buy what's going on. And of course, you've got the whole understanding that you heard Chairman Powell say on Wednesday that the economy is great, and I said I'd like to know where. Now again, I know some states are doing very well, and I'm not saying I saw retail has picked up. So I'm not saying that it's a total disaster, but I'm saying that it's not as good as it appears. I think it's more being done with mirrors than with anything else. And of course, the ECB is going to keep rates negative for another year, which again makes absolutely no sense. I want to understand why we don't let the free markets take care of things. Why are we so trying to defend? And part of that problem is because of all of the mistakes that the Federal Reserve has made with their trying to prop up. Remember, they have $5 trillion in this whole mess and have created nothing. And I think that's a problem. And of course, this is something that we don't quite understand and we continue to let fester on, all right, is a Federal Reserve that has no responsibility to anybody, and they have full and free reign to do things. Now, you tell me why there's so many, we talked about this earlier, peer-to-peer lenders and all those other things going on. That's because the Fed created them because the banks don't want to lend any money. The banks are, once again, in my opinion, I don't think they have enough in reserve to cover the loans they have out there. I think that you're going to see a debt bomb, and this has all been created by the Fed, by the ECB, and the other central banks around the world. Okay? Now, one thing that I did want to mention, and as I close here today, is Bill Maher. I want to say that Bill Maher is an idiot, and I cannot believe that any person would want the country to go into a recession just because they don't like the President of the United States. and it doesn't matter who the president is, how can you want your economy to collapse because you don't like the guy who's leading it, or the gal, in this case the guy, but in some cases maybe the gal. I think that is one of the most moronic statements I have ever heard in my entire life, and I can't believe that a person that is worth well over $100 million is hoping that our economy collapses to destroy a lot of innocent people, their wealth, and their potential of retirement because he doesn't like the president. Bill Maher and, of course, Robert De Niro, hopefully you guys will go on a boat somewhere and that boat will sink. This is Bubba's Bottom Line. Todd Bubba Horwitz, and of course, everybody have a great week, great weekend. We will see you back here next week on Bubba's Bottom Line. Have a great weekend, everybody. Thank you so much. We'll see you later.